Welcome, Bitcoin friends. It's Bitcoin Mamo. Today we're going to look at the Bitcoin charts, do some TA, look at various time frames, and we'll also take a look at market cipher. So we're going to start here looking at the S&P 500 chart. This is the US stock market, and we are on the 3-week time frame here. And we can see ever since the peak of the stock market, we had this downward sloping trend line. We did break above it. We came back and retested it. We got a nice strong bounce. And now we have been consolidating in this range around this golden pocket here, looking at the fib retracement from this high to the low. We also see, looking at the VPVR, the amount of volume traded at certain price levels, that we are above the main spike here, where the most amount of volume was traded. I do also have these order blocks drawn in blue. These order blocks are areas of supply and demand. They come from a single red candle in an uptrend or a single green candle in a downtrend. It's a break in the trend. Time was spent here and volume, and these areas become of interest later on. They can act as support or resistance levels. And we can see we have been pretty much bouncing between these two order blocks over the past 6 months or so. So we are stuck in this range for the moment. And for us to go higher, we do need to close above this order block, and then we can target the next order block higher up. And just looking at market cipher on the US stock market here, this is on the weekly time frame. We do have this green dot currently. It's not confirmed till the end of the week, but we do see the two previous green dots here did pretty much get the bottoms on these pullbacks. So if that does get confirmed, we may go higher here and we'll be looking to make a new high. We are also above the 50-week moving average in yellow and the 200-week moving average below in red. So things are still looking quite good for the stock market on this recovery from the low. But over to Bitcoin now. We are going to look at some more of the macro time frames, and we're going to compare the 3 cycles here. This is on the monthly time frame, and we are on the log scale. So the fib levels here do look a bit warped, but the fib levels are based on the regular scale, even though we're looking at the chart on the log scale. If we switch to the regular scale, we can see it does change how they do look. But just zooming into the first cycle here, what we can see is we do have this monthly order block from this green candle in a downtrend. And just looking at the golden pocket area also on the peak of the bull market down to the bottom of the bear market, this does seem to be a key level here. We can see it from the bottom here. We did have this nice run. We did have some pullbacks along the way, but we didn't have a major pullback till we got to this order block and also this golden pocket. And there aren't many monthly order blocks. There is actually one here as well, but we're focusing on the one higher up here as it does line up pretty much with this golden pocket. So just looking at this pullback, it doesn't look as bad on the log scale, but this was actually a 40% pullback. And if we looked at another pullback here, this one was 30%. So we did have pullbacks along the way, but we can see we pretty much had a nice run up till we made it to that golden pocket area and this order block. And then we did spend about 5 months consolidating in that range. So just looking at the second cycle now, doing a similar thing. We've got that golden pocket drawn in from the peak of the bull run to the bottom of the bear market. And we can see this time we did have a quick run up without any pullbacks here pretty much. And we came exactly to that golden pocket area. We did have a monthly order block here from this green candle in a downtrend. And we did go a bit higher, but we can see the candle body closes were pretty much near this order block. And we did also touch that golden pocket area. And then we did have quite a big pullback, a 53% pullback, whereas that first cycle was about a 40% pullback. And I'm not taking it to the COVID low here, as this was more of a black swan event. But we can see in both cycles, we had a nice run to that golden pocket area, also came to the monthly order block before we did have that major pullback. So now looking at our current cycle, this was the bull market peak. I'm assuming this was the bear market low here. And if we were to do a similar thing, the golden pocket is all the way up here at about 50K. We do also see a monthly order block here. This is the only monthly order block here in this entire cycle. We see it's also near that golden pocket area. So if we were to do a similar thing, we could perhaps come all the way up here to around that 50K area. The order block's down at 44K. And again, doesn't mean we don't have pullbacks along the way, but I think it's possible we don't have a major pullback, like a 40-50% pullback, until we do get to this range. But if we were to get all the way up here and have that 40% pullback, it would pull us back to around 28K, possibly the bottom of this range on this pullback. This is probably a few months away. And again, we could have pullbacks along the way here, and it doesn't need to look the same. And a 50% pullback would get us to around 24K. So what would this look like if we overlapped from the bear market low to the golden pocket from each of these two previous cycles with our current cycle? So copying that pattern from the first cycle here and applying it to our current bear market low and run, we can see it would look something like this, coming up to that golden pocket area where we did consolidate for a while here before having that one more push to that area. And looking at the second cycle, doing the same thing here, it would look something like this, where we spent less time reaching that target. But we can see we have had these nice moves to the upside. And if we do continue with this run, eventually reaching this target, if we were to do a similar thing to the previous cycle, that would be sometime in May. That was quite a quick run. Looking at 2 cycles before the current one in blue here, that would be sometime in September. But we'll have to see how that plays out. Again, it doesn't have to do the same thing. But it is interesting that in the 2 previous cycles, we did have a nice run getting to that golden pocket area before we saw a bigger pullback off around 40 to 50%. And going down to the 3-week time frame now, we've got those fib levels from the bull market peak to the bear market low. And I've added in the 382 fib level. We do see it does get the bottom of this range here. And I think personally, we're going to have one more push here, possibly come to the 382 fib at 36K. We do also have a 3-week order block here from this red candle. So we could end up closing the bodies of the candles in this order block while still wicking higher. But I think we may get a pullback at this level and possibly only like a 20% pullback where maybe we come back to 27K or even 25K, which would be around a 27% pullback before continuing higher. But I think this will be a key level where we may get resistance here. And what we actually notice, if we do a fib level from this high after this dead cat bounce, taking it from there down to our bear market low, we do see that the golden pocket, taking it from this high, does line up with the 382 fib, taking it from the bull market peak. So there is some confluence there. So I think this may be a key area of resistance. And we also notice that golden pocket does also line up with this peak on the dead cat bounce. And if we were to add the 1.68 fib, taking it from this high to the low, what we see is it does line up pretty much with the all-time high. So there is some confluence with these fib levels here. And I think this will be an area we get resistance, but I do think we push up higher before seeing that. But it's just an idea when looking at fib levels. Obviously, this area was support on this pullback here and also here. So I do think this is a key area where we will get resistance here. And going down to the 2-week time frame now, got those fib levels drawn in again with the confluence between the 2 fib levels. But just looking back at something we were watching a while back and looking for confirmation that the bear market bottom was in, we did have this drawn in on the RSI and looking at the 2 previous cycles. So just a refresher to see how this played out. We did have this level here at around a 45, 46 reading. And we looked at the previous cycles. We mentioned once we get into this green zone, it does confirm the bottom's in and we start the next bull run. We saw that with both of the 2 previous cycles here. And with our current cycle, we did enter the green zone here on this candle close. We saw it lined up here with this candle. It also was when we broke the trend line looking on the log scale. And so this also confirmed the bottom was in and we were starting the next bull run. Looking at some order blocks now on the 2-week time frame, we do have a couple of order blocks here. So there is support if we were to come back down, but we don't see the next order block until we get up to about 33K to 36K, which is also in line with that 382 fib from this high and the golden pocket from this high. And going down to the weekly time frame now, we've still got those other fib levels drawn in. We do see how this range between the 382 fib and the golden pocket here does encapsulate this zone where we did spend time bouncing between these levels. But just zooming into our more immediate price action here, we've got the weekly order blocks drawn in. And we do see we are approaching this order block higher up here from this green candle in a downtrend. This order block is between 29.5K and 29.9K. So we may get some resistance if we do end up coming up to this level. And I think if we were to have a pullback here, perhaps we go a bit higher before we get that pullback. I wouldn't be surprised if we only came back to the 382 fib and then bounced. I think we are quite bullish here. And when we do only pull back to the 382 fib and get a strong bounce making new highs, it is very bullish, only pulling back to this fib level rather than all the way back to that golden pocket. The RSI looks quite good here. We don't have any divergence here. We see higher highs on the price action, higher highs on the RSI. So that generally leads to a continuation on a macro scale. When we do get these big runs, we can look for divergence on the weekly time frame to give us a better confirmation that we are going to have more of a decent pullback. And that's something that we did see here during 2019 on this run from 3K to 13K. We saw here we did make slightly lower lows on the RSI while making higher highs on the price action. And we saw that was an indication that this was the end of this run. And then we did start coming back down again. The other thing that's a good sign for the bulls here is we are above the weekly EMA ribbon. We did have this strong candle. We closed quite a way above it, and we haven't come back to retest it yet. We would like to see this ribbon flip with the yellow quicker moving average coming above the red slower moving average. And once we see that, generally on a pullback, the yellow line acts as support, and we continue the bull run bouncing off this weekly EMA ribbon. We can see that clearly in the 2017 bull run here. Once we came out off the bottom of the bear market here, we can see once we got above this weekly EMA ribbon, eventually came back on a pullback. The ribbon flipped with the yellow going above the red, and on the pullback we got support off the yellow line on the EMA ribbon, and we saw that a few times here, and each time we pushed higher. This time we wicked a bit lower, but the candle body is pretty much closed on the yellow moving average, and we saw that all the way up on the bull run, all the way up till we had that blow off top. This is quite a good guide on the bull run. We are back above that ribbon. That is good for the bulls. I think we have one more push here before a pullback. Again, maybe at this 382 fib level in confluence with that golden pocket from the all-time high retracement. By the time we get up there, eventually this ribbon will flip. We may have a pullback and possibly look for a bounce off the top of that ribbon. But again, anything can happen. We're just looking back at past cycles and what happened previously. The other things we were watching here, this is on the 4-day time frame. We were looking at market cipher, and we noticed each of the bear markets. We went into the red money flow. We've just got the money flow displayed here and everything else removed. And we saw that on all the cycles. We go into the red money flow. Once we flip back into the green, it indicates the bull run has started. We saw that on the 2 previous cycles. And we noticed that once we went into the green here, we did say the bottom was in and we're going to start the next bull run. But just a refresher on that to see how this performed. But over to market cipher now. Ignore these lines for the time being. I've just looked at these runs coming out of the bottom of the bear market and how to know when we're going to have that more decent pullback here. And just looking at the first cycle here, we came off the bottom of the bear market. This was our first decent pullback, and this was actually a 25% drop. But what we notice is if we go on the 9-day time frame, once we got this red dot here after going above this line, while we were still in the red money flow, this red dot was quite accurate at predicting the pullback, and there were no other red dots here. And if we look at the next cycle now, coming out of the bottom of the bear market, we had this big run up. Again, we're on the 9-day time frame. We saw that this red dot also got the top of this run pretty good. And after that, obviously we had that 40 to 50% pullback here. So the 9-day does seem pretty accurate. So just looking at our current cycle, we can see the blue wave is still coming up here. We don't have that red dot on the 9-day yet. So I think this is something to watch for. We're almost above this white line. I think we have another drive to the upside, and then we can look for that red dot on the 9-day time frame, as it was accurate on the two previous cycles coming out of the bottom of the bear market. So that's something we'll keep an eye on. We also notice we're still in the red money flow like we were on the two previous cycles. If we did go to the smaller time frames, this would be a bit more choppy with green and red dots in between, not a single red dot. So I think this is the most accurate time frame to keep an eye on. So let's just look at some different time frames now. We're on the daily time frame. We can see we did get this red dot. We did go into the red money flow. I did expect us possibly to come down to 25K, but we did get a bounce, and now we have got another green dot, and it has been confirmed. The 2-day did have a red dot here. It did get confirmed, but a green dot appeared straight after, even though these two previous 2-day red dots were quite accurate at getting a pullback. Currently, we do have a green dot, but it won't be confirmed until tomorrow's open. And the 3-day doesn't have a red dot present yet. Neither does the 4-day or the 5-day. We did get that green dot on the 17th of March after this pullback, and the 6-day similar, also doesn't have a red dot. So we are seeing the higher time frames looking like they still have higher to go. So those red dots on the daily aren't as significant. We probably see choppiness with red and green dots on the daily because these higher time frames are still pushing up. And even the weekly is quite strong here. After that green dot, we are pushing higher, and we see strength with the 2-week chart. This blue wave doesn't look to be closing off at all yet. So that's why I think we have at least one more push here, and probably over April we continue to go up, as we do need to see some of these higher time frames like the 2-week here get that red dot. And again, we're looking for the red dot on the 9-day, so in between the weekly and the 2-week. And it does seem like that's going to take a while, a few more 9-day candles and a couple of 2-week candles at least. So that's the main reason why I think we have one more push higher here before we see a possible bigger pullback. And we do close the monthly candle on tomorrow's open. And of course, we did get that monthly green dot at the start of the year. And in previous videos, we mentioned that this is a good signifier that the bottom of the bear market is in. And we have seen that play out so far. But again, the key thing to take away here is on the 9-day chart, which we're looking at, looking for that red dot to indicate that the top of this run is in, and we're going to have more of a decent pullback, just like in the previous cycle. The top of this run, we got that red dot, had that pullback, and also on the previous cycle, we had that run until we got that red dot on the 9-day. We had that 25% pullback. So I hope you enjoyed that analysis. Has been a while since the last video. We'll eventually get back into the swing of it and have more regular videos, but I will keep people updated on this 9-day chart. The next 9-day candle does actually open tomorrow, and then the one after that on the 10th of April. So when we do open these new candles, I will update on Twitter with that. And I think this is one of the key things to keep an eye on, rather than looking at the noise on the smaller time frames. So thanks for watching. I'm Bitcoin Mamo. I'll see you next time. Bye.